Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, October 6th, and pretty much I'm going to get into a market analysis, throwing up my caution flags because I'm a little bit concerned about where the rally is, more towards technology stocks, and we're going to get to that. But overall, in a general stance, the markets are still good. Are we still going higher? Yes or no? I mean, without a doubt, yes. The market continues to have an underlying bid. Every dip is a buying opportunity. However, and let me get to the point here, we are arguably at a potential double top on the S&P. So I'm going to zoom in a bit. So we tagged this level once after an explosion off the FOMC, Federal Reserve, saying QE infinity. That was this day. I'm pretty sure, at least. We saw a nice push to the upside. Basically came back down to consolidation to support here. And we bounced again the beginning of this month. Jobs report on Friday, it was good as far as, the actual number. Unemployment rate under 8%. Whether you want to believe that or not is fine. It doesn't really matter. Let's continue to look at price. We're at a double top here. Some investors, some traders took advantage of that strength, sold into it, and we basically gained no ground after our first employment report under 8% since Obama took office. So that's something to consider, and just the fact that we saw selling into strength on that, what I'm looking at here is maybe this is kind of baked into the market. And maybe all this good news is baked in, and until we see a result in the election, until we see a winner, the market may have found its highs for the current period. Now, I could be wrong. The volume profile charts on a monthly basis still look okay, and there's nothing necessarily wrong with it. As I zoom in here on a monthly chart. So the point of control for last month was down at this 1435 range, and you can watch last weekend's video. I said you're going to get a move off of this 435 zone, plus or minus 5 points. Sure enough, what do you get? From 1435, you got to push up to 1465. In 1 week, you got a $30 move in the S&P. If you are aware of these levels, you made money this week, and hopefully you did. Hopefully you realize that these levels continue to work. However, we're at the top of this range, and this could be a potential balance phase. We could easily come back to retest 1435. Just because it bounces off of it doesn't mean we're exploding to new highs. During an uptrend, sure, that is usually the case. However, uptrends don't last forever. And there are going to be points where selling overtakes, all of a sudden there's not enough buyers, the sellers overcome, and, they start to push prices back down. That's what we're starting, that's what we could potentially see, and I think it's just something that you want to pay attention to. If you're looking at the NASDAQ, and I think this is what worries me the most, the NASDAQ is fairly weak relative to the S&P. We have a potential start of a lower high here. And actually, going towards, I'm going to pull it up, the monthly chart on the NASDAQ, instead of the point of control for last month being at the top or the bottom of the range where we bounced off of it, the point of control is at the top of the range, and all of a sudden, we're selling off against it. We're getting big sell bars against the point of control. That's why I put on a bearish position on the Qs. That's why I bought put spreads. That's, I want to take advantage of a market that may roll over, and I want to be a part of that market. And I think it's the NASDAQ that's underperforming. You look at Apple. Apple should have bounced again off the 50. It did, and then it made new lows. On, looks like Tuesday, I bought Apple near the lows. It was below 654. We had a nice bounce. Guess what? To the 20-day, to the average true range stop, that's what this stop is, this trailing stop. It was also some, let's get it, let's be fair, retracement, about the 38% retracement. So Apple, if Apple starts to roll over, and it could roll over down, and I don't have the moving averages on for some reason. Never mind. Apple has the chance to roll over. Here we are at what should be support, and on Friday it didn't really support. So if we see follow through, just be aware that Apple could take a $50 dive, and I would consider that the buying opportunity on Apple. Unless if we bounce on Monday with good volume, I do not consider this the buying opportunity on Apple. I do think that if we get, even in the value area high, 635, you can buy Apple lower, and I think that's the point that needs to be made. If we get an opportunity to buy Apple around 600, I think that's where you pick it up. But for right now, I don't think that's where you want to be. I don't think you want to be in the NASDAQ. I think, personally speaking, you look at Google, and if I've been long Google, I look to scale out of some of this position just because it's ran so far, and eventually all of the buyers become potential sellers, and then once the selling starts, you put yourself in a situation where your emotions take hold, and you're in a bad situation, and you're holding a position that's no longer working. So I'm not saying that look, Google's clearly outperforming, especially relative to Apple, but eventually, all rising tides lifts all boats and vice versa. So just be aware of that, and, be careful. The Dow made new highs, sold off into strength, similar to the S&P. The S&P didn't make new highs, but sold into strength. And the Russell, we have a lower high here. The transports, you've had a really nice bounce off of these lows. You're at the value area low here. A little bit of selling into that, that's fine. I'm not going to pay too much attention to this. I think the main thing I'm saying here is, for the first time since this rally started, now if you can go back to my videos back in June, back in the end of June, I was saying buy the weakness, buy the weakness. There were opportunities to sell the strength, get some shorts. We did it. We did it until this level here. All of a sudden it no longer worked. Up at these higher levels, we tried to use it as a hedge. Didn't work. The market continued higher. This is the first time I'm saying be careful. Don't be a cheerleader. Don't be a raging bull. That's how you lose money, and I don't want that to happen. So just be aware. I also want to say I'm still long names. Bristol Myers, 34 puts, still short them. Basically, I'm looking for Bristol Myers to move higher. However, if it doesn't do so, and I think you can exclude this tail because I don't think there's too much into that, but I think what I'm looking at here, and this is how I'm judging Bristol Myers, if we start to see relative weakness here, I'm going to ditch the position. The position's in profit territory. I think it's 34 by 32 put spreads that I sold for credit. They're in profit territory. They're okay. Similar, Altria, it's working. There's no reason to necessarily sell this. Are we getting lower highs here? Yes, we are. However, this is a dividend payer of 5%, and we have the point of control for the year here. So this is where value is, and this is where we're currently trading. So I'm not going to give up on the position, especially because, once again, it's in profit territory mode. Similarly, Coke owns shares on this. No options, just shares. It was up more than 0.5% on Friday. Is it working? Yes. Is there any reason to sell it? No. There's no reason to sell this name because it's still working. Apple, is there reason to sell this? Yes. That's why I'm no longer in Apple. I completely took off my position on Friday at 665, 64, and then a break even around 654. There's just no reason to be a part of that. Volatility index. You're back at these lows where it's been right to be a buyer of volatility. That's why I personally bought this 69.5 by 69 put spreads expiring this week. Guess what? They're already fully in the money. I paid 17 cents a piece, so I can essentially almost triple my money in, call it 7 days now. And really, I need the Qs to stay where they are. So I'm really just looking at the time decay on that to take full advantage of it. And now all of a sudden I have my hedge to the downside. And all I'm doing is playing off of these volume profile levels. Monthly profiles told me, hey, be careful. You could see underperformance. You could see a top in the Qs. So I took my Q. Sorry for the pun there. I said, okay, I want to take advantage of a market that could potentially roll over, and I want to be a part of the underlying, the sector that could roll over. And here we are, the Qs, the one that underperformed the most on Friday, and it's working. So I want to stick with that. I want to be under allocated to technology, and I want to stick with what's working. ConocoPhillips. Let me get back to the daily chart here. ConocoPhillips is working. This is just a grind higher, if that's what you want to call it. I see consolidation. I see value up at this 54 level. I see a triangle pattern. What I'm looking for now is a potential breakout to the upside, which makes you want to look at oil, which I think is just going to continue to be range bound, value area low. I have to say, I think that's going to be general support. I wouldn't be surprised to see oil come down and push towards 85. And whether you want to call it some conspiracy on the Obama administration, I'm not going to go that far because that's not my deal. But just realize that they have a lot of reserves that they can release into the open market, and there's rumors that have it that that's what they've been doing. So, just leave it at that and realize that you can be playing oil on both sides of the market. Just kind of want to point that out. Gold, taking a breather on Friday. Could it be at a potential top? Sure. This is triple top territory without a doubt. We've gone from value area low, piercing basically straight through a year. Let's call it we're at 52-week highs. Not quite. I'm going to go to year to date. Not quite, but we bounced or we broke out from this consolidation pattern where it happened to be where the point of control was. That's where we bought this, circle, this oval. That's where I got long more gold than I already was, have rode it up the majority of the way, hedged myself a little bit along the way, which obviously wasn't necessary, but that's just the way that I trade, and obviously this is working out. Similarly with silver. Are we seeing a pullback right here, right now? Of course we are, but similarly, off this point of control here, look at where the breakout happened, right at that level, basically to the penny, and once we broke above that level, where did we go from there? Straight up. This works. I'm trying to pound the table to show you that you don't have to look. I don't have any other indicators on the screen. I'm just showing you volume. I don't think that there's much more to trading than volume and price action, and I think that's the point that I want to hammer home this weekend. Is you don't have to be allocated, or you don't have to have these 20 indicators on your screen to make money. Just be aware that the market goes up, down, sideways on every single time frame. Know your time frame. Know a few other time frames that correlate with your time frame, and trade. It's not much harder than that. You're going to lose some, but focus on winning a lot. Focus on managing your risk, and you're going to make money in the market. Be patient, and you'll do fine. So overall, I'm raising up the caution flag. Be careful. Don't be a raging bull. Be opportunistic. I'm just going to bring up Freeport just to see it. Sorry about that. I just want to see what it was looking like. But don't be a raging bull. Stick with what's working. If what you're holding is working, then there's no reason to sell it. However, if it's not working, then you want to get out of it because there's no reason to take a loss. It's just really not worth it. It's tough to recover from losses, and I just want to leave it at that. The one regret I had was I took off Wells Fargo basically near the lows here, and that's my reason was I wanted to decrease my exposure to the long side. And my Wells Fargo position it wasn't really, it was in negative territory. It was at a gain, and then all of a sudden it's in a very small loss territory, not a big deal at all. And so I took the position off, and all of a sudden the next day or two, it goes up. All of a sudden that calls, I was long 35 by 37 call spreads. All of a sudden, I don't know what those were at the highs, but I'm sure it was close to a double. So I took it off for a small loss, and now, at that point they were worth a double. Frustrating, but you move on, and you realize that everyone makes mistakes. I was also, and I actually still am because I'm okay with taking a break even, a little speculative position in STEM. Had a nice bounce on Thursday, retraced on Friday. My cost basis is $2.06. If I get hit, whatever, break even, no problem. I was just looking for a potential breakout here. Point of control for the year at these levels. Maybe we break out and we see some type of, maybe not a move like this, but maybe another push to the upside. So we'll see this week if that works out. I'm not banking on it. I'm not going to lose money on this trade. Stops at break even. It's not worth it, but I'm just kind of leave it there. Be careful in the market. Don't be a raging bull. Realize the chance for a pullback is pretty decent, and I think it's important to be careful. Euro, I think this is something that you can look to sell into strength. On the opposite side, dollar, I think this could be potentially something you look to buy on weakness. I'm actually interested in the monthlies. So maybe I should take that back. Don't buy on weakness. Don't sell on strength. Look for consolidation and see if these important levels hold. So far, the dollar's under last month's point of control, so that's bearish for the dollar. The point of control for last month, price is currently above that on the euro, so that's bullish. You want to leave it at that. However, okay, this is what I was looking for. Let me get rid of all these lines. The weekly profiles of the euro, all of a sudden, you have a potential resistance level. So I'm looking at this point of control level here. So far, resistance on the euro. Let's see if it holds. If that's the case, I think you look to sell the euro. And let's look at the dollar. The dollar's still pretty weak, so leave it at that. I think I've said before, I don't think it's right to be. I don't think it's right to be a buyer of the dollar, and I don't think it's right to be a buyer of the euro, and I don't think it's right to be a buyer of the dollar. I just think that the move happened in the dollar to the downside for now, and the move to the upside happened on the euro. So I'm kind of flip-flopping here, but that's just kind of how I stand. I think your ultimate resistance on the euro is where we sold off from earlier. Remember that weekly point of control where we sold off from Friday at these levels. Just be aware of it, and I'm going to leave it at that. So I hope I kind of made it a few points here. Be careful. Stick with what's working. If it's working, stay long. If it's not working, get out. It's really not worth it. You can always buy it back. And manage your risk appropriately. Don't take a big loss if you don't have to, and let your winners kind of ride. So take care. Have a great weekend, and I'll talk to you later.